Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, I don't know about you, Curtis, but things seem to be speeding up and hotting up rather than slowing down at the minute with Christmas around the corner. I don't know.
Yeah, no, you're definitely right, because just looking at pulling the headlines together for today's show, there's so much going on. I mean, there are a lot of breaking stories, one of which broke after I put the notes together. So so we've got a hot breaking story to include in this week's pod.
Yeah, and we will try and keep you, I think obviously trying to keep ahead of the news is always challenging, but it seems to be that end of the year rush now to, and we'll talk about this later on in terms of those news stories as well that's in the headlines this week, but everything seems to be a last minute rush, meetings and things before the year end goes, but yeah, been a busy time. Before we get on to all the headlines for this week, again, shout out for the Steve Young interview. I know we mentioned it and shared a snippet on last Saturday's podcast, but we did share the full interview this Wednesday morning, just gone, on the full interview there with Steve Young. So if you haven't managed to listen to that, then I'd highly suggest you have a good listen. Always informative, always thought-provoking, those chats with Steve, and that should be on your podcast feed from this week on Wednesday, so catch up on that one if you haven't done already.
And that will be followed next week with our monthly catch up with Darren Martin from Cap HPI, and Darren will be giving us the lowdown on how December performed. So looking forward to that.
I think everybody will be looking forward to that one. I know you were flying solo last time, weren't you? Because I was away, but I think everything going on in the market at the minute with used vehicle values, there'll be a lot of interest in hearing what Darren's got to say in terms of what's happened in December, and more importantly, what he believes January will be looking like. So do stay tuned for that one next week.
Headlines this week from Car Dealer, AM Online, Motor Trader and Motor Finance. Starting with MotoNovo to shut FindAndFundMyCar online platform early next year. We have some acquisition stories, starting with Sytner to buy Rybrook chain of showrooms. JCB Group expands with Volkswagen dealership acquisition from Marshall, and SLM Group acquires Quest Motor Group in Braintree. Elsewhere in the news, we have dealers urged to prepare for bounce in online used car searches immediately after Christmas Day. Dealers say ZEV Mandate will fail to boost EV retail demand, and 3 out of 4 dealers say rising insurance costs make some cars difficult to sell.
Well, before we get on to all the stories, let's go over to motortrader.com with the news there that MotoNovo to shut FindAndFundMyCar.com, which is their online platform. And it goes on to say that MotoNovo is to axe the online classified and finance platform FindAndFundMyCar.com in early 2024. So I think this has come a bit of a shock at the minute, hasn't it, to the sector of this breaking news that's hit the headline.
Yeah, and it really is breaking news, because this happened only this morning as we record this, and it's a surprising one. I didn't see this coming, and you and I chatted before the recording that this wasn't on the radar. So it does come as a bit of surprise. Now, the platform was launched in January 2018 by MotoNovo, and the idea was to provide this aggregation website advertising dealer stock. And it was launched, it had a very high profile launch. There was a £5 million advertising spend in the first 6 months to promote it across online television. There were some TV ads, as well as across the B2B media. And the initial plan was to provide MotoNovo finance, but also open up the platform to other finance houses to compete against some of the direct lenders. And initially it was headed up by Philip Morgan, who was brought in by Go Compare. So MotoNovo put a lot of thought, a lot of investment into the site, and interestingly, dealers initially had to pay for the listings, but that was actually axed within the first few months of launch. So, a lot was going on there, but that they've obviously decided that it's no longer core to their activities. So it will close in March 2024.
Yeah, and there's a couple of comments in this story saying that MotoNovo said that rather than investing further in what it described as a crowded car aggregation market, it was stepping away from the sector to reinvest in wider opportunities to enhance its products and propositions. And a spokesperson said that following a strategic review of our business, we've decided that we will be decommissioning FindAndFundMyCar.com from March next year. Any further deals secured through the FindAndFundMyCar website will be unaffected, and any stock on the website will be removed when it closes. So, bit of a shame, but I think the comment there, crowded car aggregation market, kind of sums it up, that it is getting busy out there, and I suppose it's to them is how much money they continue throwing at what is a fairly aggressive and competitive market space for them to operate within.
Yeah, and it's worth adding that within the first 12 months of launch, MotoNovo said there were 136,000 vehicles on the site, and it was supported by 2,600 dealers. So that first year seemed to go very well for the business. So it would be interesting to know what happened after that. But there's obviously been a strategic review there, and it will close in March, as we said.
And going on to some acquisitions. So we are at that clock. I mean, talk about 11th hour, Curtis. But yeah, we've got acquisitions happening in the 11th hour. And the first one we're going to talk about is what Curtis mentioned right at the offset here over in Car Dealer. And the Car Dealer Group, Sytner's American parent company, to buy Rybrook chain of showrooms, saying that Penske Automotive Group is to expand further in the UK. And it announced the purchase of Rybrook Group, and that Rybrook will join Sytner Group in Penske's UK portfolio. Now, you have to read the story a little bit further with this to try and gauge what is actually happening, and other trade media have covered it slightly differently, because it's not quite as clear-cut as it seems, because further on in the story, it talks that it will be snapping up Rybrook's 15 premium dealerships comprising of 4 BMW showrooms, 4 Mini locations, 4 Volvo sites, 2 Land Rover dealerships, and 1 Porsche showroom. Now, anybody that knows Rybrook, they have got further representation other than those brands that they operate within. So it doesn't look like they've taken the whole business. It looks like they've taken a proportion of what they have.
Yeah, because they also operate showrooms with Bentley, Rolls-Royce, McLaren, and Lotus, and they're not actually mentioned as part of this deal. So it's significant, though, isn't it? And as you say, talk about going down to the wire. It's where we were. Was it 12 months ago with the Helston deal went through just around Christmas, just as you thought things were starting to quieten down. Virtue Motors bought Helston. Well, this is, this really is a significant purchase for Sytner, and it does strengthen its representation, certainly in the brands you just mentioned there. And Rybrook itself, it's one of the largest privately owned groups in the UK, ranked number 18 in the AM 100. and with revenues of £935 million. So this part of the business that Sytner is acquiring will certainly contribute a lot to the bottom line. And I did read somewhere, I think it was possibly in the AM coverage, that with this deal going through, Sytner could be the first dealer group in the UK to achieve a £8 billion turnover figure.
Yeah, it's significant. I think when we covered the ongoing and fairly lengthy ongoing Pendragon purchase that Lithia eventually won, and Penske at one point had thrown their hat in the ring. So I think the intention was there that Penske had ambition for further expansion in the UK. So I think it was just a kind of waiting game to see if they continued and who they would try and swoop on in the UK and take on. So it's a great acquisition. I mean, you just think about that portfolio of manufacturers representation for Penske, what that adds to the Sytner representation in the UK, taking those businesses on. I mean, it's a perfect fit. And David Kendrick, UHY, said that this is another significant purchase for Penske and a great bolt-on to their existing portfolio. They are now some serious force to be reckoned with. It will be interesting to see what happens with the remaining Rybrook businesses, which is probably our question as well, to see what happens now with those other sites, businesses, and those manufacturers that you mentioned earlier, Curtis.
Yeah, definitely. And a shout out to Darren Edwards, the CEO of Sytner Group, and a listener to the podcast, Phil, because he says, "We are delighted to announce this transaction. The Rybrook dealerships represent exceptional brands with a strong commitment to providing exceptional customer service. We look forward to continuing this legacy and welcoming these franchises to our team."
And a couple of other smaller but not necessarily insignificant acquisitions that have also taken place that AM have covered. And the first one being JCB Group expands with Volkswagen dealership acquisition from Marshalls. So this is that the JCB Group has taken over the Marshalls Volkswagen dealership at Tunbridge Wells, taking representation of the German brand now to 3 locations. So again, you can start to see where there's these moves now starting to happen, Curtis, as we get to the end of the year.
Yeah, definitely. And I've got another one for you here, also with AM, and the headline there is SLM Group acquires Quest Motor Group in Braintree in Essex. So this is family-owned Quest Motor Group, was actually founded in 1924. So like Rybrook, a well-established business. The business has operated as a Suzuki dealership for 4 years, and in 2022 also became a Bosch service centre. So the purchase sees 45 new employees joining the SLM Group, and the site will continue to operate as Quest Motor Group, but as a subsidiary sitting within SLM. So Group Marketing Director of Group Managing Director of SLM Group, Mark Phillips, said, SLM Group shares Quest's commitment to providing excellent customer service and building strong relationships with the local community with family values at its core. So a good acquisition there for SLM Group.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So next headline is from Motor Finance, and it really follows on from a conversation that we had, I think it was 2 pods ago, actually, Phil. So the headline is, dealers urged to prepare for bounce in online used car searches immediately after Christmas Day. So a couple of episodes ago, we spoke to Phil Jones and Lucy Tugby from Motors, and they were talking about this research that they'd been looking at regarding search trends in the run up to Christmas Day and the immediate aftermath. So what's happened now is that they've actually published the data. So and it's been picked up by a few of the titles this week. So the motor finance coverage says that online searches for used cars over the festive period are expected to bounce in the days following Christmas Day. And this, of course, provides a welcome boost for dealers with up-to-date stock listings. Now, the research of these Christmas search trends data actually goes back to 2018. So what most have been able to do is track the changes year on year, and it shows how traffic eases off from the end of November up to Christmas Day itself, and then activity bounces back immediately, with average Boxing Day searches 38% higher than Christmas Day and up 20% on Christmas Eve. But it doesn't stop there, because the data reveals that the 27th of December is actually the key date in the seasonal calendar, with used car searches leaping 67% ahead of Christmas Day and 46% up on Christmas Eve. So this really does show that whilst sort of minds are focused on Christmas Day, afterwards,
yes,
it wears off, and you sort of reset. You go back to your normal life, and you think, well, what about that car that we need to buy? And that's when the searches start to pick up again.
Yeah, and just adding a little bit of that. I think we talked about the market being slow at the minute, and you had the conversation with Darren the other month, and we'll be picking up with him again next week. But the dealers have been out a little bit slower than normal, building up their stock levels. As being elements of buying limitations and restrictions and stuff. But I think just in the last week to 10 days, that's now starting to turn. So I think the dealers are now starting to think about, what we need, some product, we need the stock, we're ready for this bounce that you're talking about there, Curtis, that need to get those vehicles in and start to build their stock ready for, a fast start to 2024. So I think weather being on our side, then I think a lot of the dealers will be welcoming a nice bounce to the Christmas period between Christmas and New Year, and a fast start to January next year.
Yeah, and I guess the key to this story is that dealers with stock, taking in stock at the moment, it's worth your while getting it up on your websites as soon as possible, because your dealerships are closed over the Christmas period. You might be reopening between Christmas and New Year, but buyers are looking really from Boxing Day. So if you have got a new stock, it's best to get it up there on your website so it can be seen, and then those buyers will hopefully get in touch with you to find out a bit more, or visit the forecourt.
And we couldn't get through a podcast without talking about EVs. So the next story, we're heading over to motortrader.com, and this is researched by our friend of the podcast, Neil Adley at Judge Service. So this is that dealers say ZEV mandate will fail to boost EV retail demand, saying that the majority of dealers believe that the new government ZEV mandate, the zero emission vehicle mandate, will fail to boost battery electric vehicle adoption amongst consumers, which is obviously where the challenge is at the minute. It's in that private consumer market that BEVs are failing currently.
Yeah, definitely. Now, I did actually work with Neil and the guys at Judge Service on this release, and saw the data. And the data, the original data, is very revealing, because what they did was they polled the views of 100 dealers during the closing week of November, to identify the key trends likely to impact EV sales from 2024, because, as you say, that's when the ZEV mandate comes into play. And I know you like explaining the ZEV mandate any opportunity you have, Phil. But the long and short of it is that OEMs from next year must sell at least 22% of the vehicles they sell must be fully battery electric vehicles, otherwise they get penalized. So dealers indicated the effectiveness of the mandate in encouraging consumer EV sales, because we know they're going into fleets, but the consumer EV sales are really pivotal here. But they believe that it'll be negated by the government's decision to push back the ICE ban from 2030 to 2035, because it's giving consumers more time to consider transitioning. So the research found 39% of dealers believe the delay will negatively impact demand for EVs, and despite the introduction of the ZEV mandate. And that's really, and most dealers, 70% thought the government's original deadline of 2030 was unachievable, and 80% do not support the Labour Party's current policy of reinstating it. So, as
you can
we
feel the
approach
positivity towards it, can't you, Curtis? Here, yeah.
As we approach the first week of 2024, everything's in limbo, isn't it?
Yes.
These rules that are being brought into place to supposedly encourage EV uptake, the dealers don't believe that will actually happen.
No, and I think this is the thing now. There's going to be a sea change next year, I suspect, in many ways, in terms of this shift now focus from the manufacturers towards EVs. I mean, it's kind of started already. We know that, but it's definitely for next year. Those manufacturers that are nowhere near the 22% will be trying to navigate the way of how can we buy credits, how do we take further debt on to a loan, future loans to cover the fines on this, and how do we get this product into the market. But clearly it's going to be a challenge however it plays out, particularly in next year and the following years, because we know that the consumer market just is not there yet for the volume of BEVs that are going to be entering the new market and subsequently the used car market. So it's going to be interesting next year. But don't get me on the platform about EVs and ZEV mandate yet. Luckily the rules of origin have been delayed by 3 years, as we discussed last week. So that's one less thing for the UK automotive sector to worry about next year.
Definitely. And final story this week is also from Motor Finance, and the headline there is 3 out of 4 dealers say rising insurance costs make some cars difficult to sell. So this is 50% of dealers say some cars have become uninsurable and unsellable. And this is all down to research from December's Startline used car tracker. And the used car tracker is a piece of research that we dip into pretty much on a monthly basis, because it's such a good snapshot of what dealers are thinking. And within this, the research identifies that more than 3 out of 4, so that's 77% of dealers, say that rapidly rising insurance costs means that some cars have become increasingly difficult to sell. And the used car tracker also reports that half think that some cars have become effectively uninsurable, so are probably unsellable. So the research also reports that 23% think that it has become well known among both trade and consumers that certain cars are easy to steal and therefore uninsurable.
We have talked about those cars, and one of the manufacturers particularly is facing challenges around that, but trying to resolve the issue. But I think generally, I think we're all feeling the pain on insurance, be it through car insurance or household contents insurance, etc., or even business insurance. I know I spoke to many independent dealers that are obviously facing hikes in insurance. But Paul Burgess, CEO of Startline Motor Finance, said that it's been reported that car insurance premiums have risen by an average of 48% year on year, which is clearly a substantial increase during a cost of living crisis when personal finances are under considerable pressure. So I think generally it's been hit from all angles at the minute, isn't it, Curtis?
That is pretty horrific, isn't it? 48%, and that is the average. I mean, I don't know when your renewal's coming up, but I think mine's fairly soon, so not looking forward to that.
Yes, yeah, it's not good. So unfortunately, we've ended there on a bit of a negative, but I'm sure we'll be fine. We've got a new year.
We'll endeavour to find some cheery stories for our last pod of the year. How's that for a challenge?
We'll do our best. Yeah, we'll do our best. We'll have to see if we can get on to add some cheer to our last podcast of 2023 as we head to 2024. Because all by accounts, 2024 ain't looking that great, is it, at the minute, Curtis? But I'm sure it'll be fine.
It's not, no.
I'm sure it'll be fine. So I say we've covered majority of everything that we've tried picking up there. There is a lot of activity, a lot of headlines hitting the trade media in the closing weeks and days of 2023, which we suspected it would do. So, as always, please keep an eye on the trade media that we've mentioned throughout the podcast through the year, and keep an eye on what's happening, because there is certainly a lot happening in the Curtis.
There is indeed, but that is all for now for this week. Many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.